your retirement is just a few years away, it may be time to adjust your investing strategy.
The shocking statistic is that by the time somebody reaches 65, 95%, they're dead broke, they're dependent on family, or they're dependent on government.
It's important that people deal with someone to make sure to prove and provide that guaranteed lifetime income.
Welcome to the Retirement Architect, David Reyes. Our program is designed to not only provide insight, but to educate and to give you the tools you need to help you design and build a rock-solid retirement.
S&P 500 2000. I don't know if that sounds as good as Dow 10,000, but that we crossed many years ago. But it is a historic time. It's the first time in U.S. stock market history that we crossed the 2,000 barrier in the S&P 500, which is much more of a broader index. It's 500 stocks, versus the Dow, which is 30 stocks. So it's a much better barometer of the overall health of the stock market. But the question really is not where we've been; it's where we're going to go. And it's the way that I look at planning for all of my clients and all of you out there. We want to look around the corner, not what's happened, not in the rearview mirror. So the question becomes, where do we go from here? Again, is it time to celebrate, or is it time to be concerned? On the bright side, let's start with positives. I'm a positive person here. There's good news here. Market's going up. We've had corporate profits, which I talked about a while back, are going to draw. They always drive earnings. They always drive the market. Earnings drive the market. Sometimes the market's ahead of the earnings, sometimes it's below. We've been really ahead of earnings. The market has been going a little bit ahead of what the earnings forecasts have been. And we, quite frankly, their earnings growth estimate was around 4% earnings growth, and we had about 10% earnings growth. So there is some real health in companies. You could argue, though, that a lot of the valuation of stocks is based upon what's called the stock buybacks. And when a company buys back stocks, it actually reduces the amount of shares that are out and available, and thus increases your earnings per share. So, there's lots of pundits that will say that, well, those earnings are not real. Well, the earnings are the earnings. You'll probably see less stock buybacks as the stock market has climbed higher because the companies are buying their stock at a higher price. So that probably won't continue at the same pace that it's been. But let's just talk about more positive things that are continuing to happen. Consumer confidence is actually the highest it's been since 2007. And 70% of our economy is driven by, the consumer. So that's an important statistic. One that's not talked about as much is oil prices and gas prices. Oil has fallen off a cliff. And that has been a big beneficiary to, of course, gas prices. We're at the lowest gas prices of the year, even though we're in still the seasonality period of summer driving and vacations. And what that means is that's more money in the pockets of consumers like yourself. And again, with consumers contributing 70% of the economy, that is a big, big component. So these are some things that are quite positive. In the market. I'll tell you the things I'm concerned about and that you should be concerned about. You should be watching out for. Number one is that we have been in a bull market for quite some time now. We're going on, 5 years plus, and we have not had a 10% correction in almost 3 years. Since World War II, we've had an average correction of 10% or more about every 18 months. The second area of concern that I'm worried about is that we generally have about a 17% correction during midterm election cycles. Well, guess where we're at today? We're in a midterm election cycle. I always say when politicians are talking, markets are dropping. And the reason for that is politicians create anxiety, okay? They create confusion. This guy's bad, I'm good. And whether Democrat or Republican, it doesn't matter. The same, negativity goes into all campaigns, and those are generally not good for markets. And as proven again, the average correction during a midterm election cycle is 17%. That is a true fact. So, we want to be careful. We are in an area of the market that is uncharted, and we want to, what I always say, protect first. Our first rule of thumb is we want to have a written plan. Okay, so every one of you should have a written retirement and financial plan. We want to protect what we have first. Most of you out there are retired or near retirement, and protecting assets is the number one concern I have for clients first and foremost. We're going to make money, but we want to protect what we have. And then third, we're going to be, if you follow those first two rules, you should prosper. You should do well. If you have a written plan, if you protect assets, you should prosper in your retirement. And that's what I hope for all of you. But I'll tell you, unfortunately, a sad fact is less than 1/3 of all retirees have a written retirement plan. All of our clients have a written retirement and financial plan. So if you're interested in talking with me personally about anything that I've discussed, how to protect your assets, how to create a rock solid retirement plan, how to live a great retirement. I've been doing this for 20 years now, and knock on wood, I've never had a client have to go back to work, which is the last thing that you want to do, right? We want to retire one time. I've retired many times, hundreds of times. You're only going to retire once. And so I want to help you to have a very successful retirement. If you want to call me and set up what we do for all KFMB listeners is we do a second opinion, and it's really worthwhile to you. Basically what we do is we go through your investments, your taxes, we do a review of your trust, again, a review of your tax return. We look at asset protection issues, long-term care, life insurance. We really do a full, thorough review. Really, I used to charge about $2,500 for this. And so it's something that you're getting as a $2,500 value that at no cost, complimentary as a listener. If you're interested in that, just give me a call at 877-406-CALL. That's 877-406-2255. Again, 877-406-2255. You can always go to our website, which is reyesplan.com. That's REYESPLAN.com. And you can peruse our website and get a lot of good information, some reports that we have online. And also, we're having our next workshop. We do a workshop that we do about 8 times a year. And it's coming up September 17th and 24th. And that will be in Rancho Bernardo, and I believe it's at the Country Club of Rancho Bernardo. But if you're interested in that, please give us a call or go to our website to register for that event. So we have an events page on our website, and you can go there and register or give us a call, again, at 877-406-CALL, 877-406-2255. So, beyond the issues I've been talking about relative to, the markets, one thing you need to be very, very aware of is that, the punch bowl and the steroids and sugar high we've been on is about to go away. And that's another concern that I have. And there's 2 areas of concern. One is that Miss Yellen, our first lady of the Fed and first Fed chairwoman, she has said that as of October of this year, they're going to remove quantitative easing. They're going to remove the asset purchases that they've been contributing to our economy for the last 5 years, and that's going to be a tell for the market and for the economy, saying how well does the economy act without that type of help or stimulus. We are still going to have basically a zero interest rate policy for federal funds, which are around 0 to 0.25%. So that's going to put a little bit of a floor on the market, I would say. Hopefully, not guaranteed, but there is still some aid that's being given by the government with interest rates not being raised. Now, Ms. Yellen said that she would raise rates in 2015, and that's been debated whether that's going to be the spring or the summer. And that's been predicated based upon mostly the unemployment rate and on inflation. Right now, our unemployment rate sits around about 6.2%, and inflation about 1.8, 1.9, and kind of the bogey has been around 6% unemployment and 2% inflation. So we're in the range of there. And quite frankly, some Fed Fed participants believe that they're basically called governors. Fed governors believe that we should be raising rates now to be ahead of the curve. So my concern for you is not only that is that going to cause a lot of volatility in the market, but really with bonds. And I know a lot of you out there own bonds, and I'm not a really big fan of bonds, quite honestly. And right now, our interest rates, the 10-year rates around 2.4%. Historically, if you look back, the last time we were at interest rates this low, because most of you have not been through a bond bear market. You have not. You've been through stock bear markets, but not bond bear markets. And your parents have. And I'll tell you when that was. In the 1950s, which when we had interest rates that were near these levels, from 1950 to 1980, interest rates rose significantly, especially really from 1950 to 1960, but all the way through 1980. If you own bonds, 10-year government bonds or any type of bonds, but 10-year bonds in particular, you lost 40% on an inflation-adjusted basis over that 30-year period. So bonds are not really a great long-term investment for you, and I would be very, very careful. And there's some alternatives that we use with clients for bonds. And if you're interested in that, you want to hear more about how to protect your portfolio against interest rate risk and inflation risk, specifically on the bond side, give me a call, 877-406-CALL, 877-406-2255. Again, that's 877-406-2255, and ask about our complimentary second opinion that I would do personally for you. And again, if you want to attend our workshop on Social Security and retirement income planning, we're going to be having those in September on the 17th and 24th at the Country Club of Rancho Bernardo. And if you want information or want to register, just go online to reyesplan.com. That's REYESPLAN.com. This is David Reyes, your retirement architect, here on AM 760 KFMB.
You're listening to the Retirement Architect, David Reyes.
Common sense or amazing guesswork?
No guesswork here. The Retirement Architect, David Reyes, will continue next.